Third one you write bank rate. Bank rate. It is a rate of interest. It is a rate of interest at which central bank lends to commercial banks. Central bank lends to commercial banks. Or write the technical definition. One more definition you write. It is a rate of interest at which central bank provides rediscounting facility to commercial banks, rediscounting facility to commercial banks against their first class securities, So apart from government securities, now I'm talking about first class securities. First class securities means what? Can somebody tell me this?
Private securities.
Yeah, these are private sector securities, or these are private sector or non-government securities. Okay. So private securities or non-government securities upon which actually banks can borrow from RBI. So for example, the commercial paper, commercial bill, etc. You can write there against which banks can borrow from central bank, For example, commercial paper, commercial bill, etc. Okay, so commercial papers are the first class securities issued by high net worth companies. The big companies like TCS, Infosys, etc. Big companies. Okay, you can write there commercial paper. One line you write, what is commercial paper? These are unsecured securities or bonds. Unsecured securities or bonds issued by high net worth companies to banks against short-term loans. So securities issued by high net worth companies against short-term loans. These are issued at discount. Of minimum value of rupees 25 lakh. Of minimum value of rupee 25 lakh. Their maturity ranges between 14 days to 1 year. Their maturity range is between 14 days to 1 year. So for example, when we talk about Infosys or TCS, so there's a high net worth company, okay, so which issue commercial paper, right? So commercial paper, let's say 25 lakh, that is a minimum, 1 year validity. Okay, so TCS will issue this commercial paper to bank. Okay, now bank will give short-term credit, right? 1 year credit to TCS upon this commercial paper. How much bank will give approximately? Like let's say 22.5 lakh. So this is what I mean by discount. It is issued at a discount. So you are issuing at 22.5 lakh, and upon maturity of 1 year, you will be paying how much? TCS will be paying 25 lakh. Okay, so close to 10% return you are getting here, or the bank is getting around 10% return here, right? So this is what I mean by discounting. Okay, so this is for this short-term working capital. So the big companies, the most important source of short-term working capital is this commercial paper. Okay, now what do you mean by rediscounting? What I've told you is this security, this is a first class security which is issued by TCS or the high net worth company. Now banks can pledge this like this. See, let's suppose TCS is issuing this paper, 25 lakh, commercial paper with 1 year validity to bank. Okay, so bank will pay how much? let's say 22.5 lakh. Now bank will give it to whom? RBI. So bank can pledge this to RBI, and RBI will give bank how much? How much can give? More or less?
More, sir.
RBI can give more. RBI may give 23, 24 lakhs, etc. Okay. So this is what actually rediscounting. Because here I have told you around 10% interest, but bank rate, RBI, this is bank rate, right? It's around 6.7%. So obviously RBI will pay more than, this 20, it may be around 24 lakh. So RBI will give 24 lakh to banks. This is what rediscounting. So in case of bank rate, yes?
Sir, so RBI is paying more to the bank because the bank rate is less.
Bank rate is less.
Okay.
And this, for this security, the company anyway pay 25 lakh upon maturity. And bank is charging more interest. Bank interest is around 10%. So this is discounting. This is discounting, and this is the most important source for the company for the short-term working capital. This issue of commercial paper, and this commercial paper bank can pledge in RBI, okay, and bank can borrow under bank rate. So this rate is what? Bank rate. Okay, RBI, the banks can borrow under our bank rate by pledging any first class security. So even though bank is lending only 22.5 lakh, bank can borrow more than that from RBI. Clear? That's what rediscounting. Is that okay? Any doubts here? This is easy concept only. There is no need to have any confusion here. Just the technical word I need to explain, rediscounting. Otherwise, discounting anybody, I'm expecting that you see this word, you see this number 22.5. But how much you need to pay? 25. So that is what discount. And that discount is what the interest actually 10%. And this 25 lakh again is given to RBI, that same commercial paper. Upon that you are getting, so that is one more time discounting, that is rediscounting.
So it is a discount for the banks.
Which one? Yeah, this first time it is discount for the banks. No, it is 25 lakh worth commercial paper is given to banks for 22.5 lakh.
Okay.
So it is discount for banks.
Okay.
Now banks won't give any discount for anyone. Banks need profit. No. The banks, why banks give any return, any discount for anyone?
Yes.
Banks won't do that.
Sir, in this particular example, RBI will be paying less than 25 lakhs but more than 22.5.
Yes.
Oh.
Because anyway, when the bank is giving this credit to TCS, bank will charge anyway more than bank rate. Bank cannot afford to charge less than bank rate. Logical.
Because that way it will suffer loss.
Yes, that way they suffer loss, because if bank need to lend, bank will borrow from RBI at bank rate. So you are taking at 6%, and do you think you will lend at 5%? No. Right?
Yes, sir.
Yeah. So now what is the impact of, how is it going to control credit? So here obviously this is again credit control measure. So when bank rate is increasing, what will happen with money supply? Whether bank will borrow more or less when bank rate is high?
So it will be difficult to borrow.
But
Yes,
it will be difficult for bank to borrow, because bank need to pay more interest. So bank borrowing from RBI will come down. So bank's credit creation will come down, right? Credit creation capacity will come down or not?
Yes, sir.
Credit creation capacity will come down. So what will happen with money supply? Money supply will reduce. So purchasing power will reduce. Similarly, aggregate demand will come down. So price will come down. That lead to, inflation will come down. Price coming down means inflation coming down, automatically growth also will affect. Okay, so No, when you increase, the reverse will happen. If bank rate is decreasing, credit creation capacity will be more because bank can borrow more and bank can lend. Money supply will increase, aggregate demand will increase, purchasing power will increase, aggregate demand will increase, price will increase, inflation will increase, growth will also be increased. So this growth increase is desirable, but inflation increase is not desirable. But when we do with monetary policy, both will happen together. That's what the dilemma, monetary policy dilemma. Now, which one will affect the profitability of bank more? CRR, SLR, bank rate. Out of these three, which one is having a direct relation? CRR or SLR or bank rate?
I think bank rates.
Bank rate is having direct relation, right? Bank is borrowing under bank rate and lending. So obviously, bank rate is increasing means bank's borrowing capacity will come down. So because if this is increased from 6 to 7, so instead of 24, you may get 23, right? So borrowing capacity will come down. So a bank rate will affect the profitability. Everything will affect the profitability. SLR increase, CRR increase, bank rate increase, all affect profitability. But bank rate affect the profitability more, or direct connection is there.
Hello, sir.
Yeah, tell me, Mahesh.
Sir, it is long-term loan or short-term